My name's Dave DeBow, founder of MoneyPartnerFormula.com, and this show is built for everyday real estate investors who are actively doing deals and looking to scale using other people's money. So if you're an active real estate investor and you want to get featured on this show to talk about your own real estate and capital raising experiences, then just go to daveinterviewsyou.com. Now let's get rolling with this episode, and remember to subscribe for daily interview content. Hey gang, welcome back. Today we've got Elijah Brown zooming in from beautiful Colorado. And Elijah is a very, very accomplished real estate investor, and especially a capital raiser. He doesn't just raise capital from friends and family. He doesn't just raise capital from accredited investors. He raises capital from family offices, institutional investors, and ultra high net worth individuals as well. So looking forward to the conversation. Elijah, how are you doing today?
Dave, thanks so much for having me on. I'm doing well. How are you?
Great. So your company is called Goldhawk. Tell us a little bit about what you guys do.
Sure. I've been doing real estate for about 10 years now. We started off as small-time owner-operators, essentially just renovating small apartment buildings and selling them. And then I realized a few years ago that I really did not enjoy doing operations. It's very difficult, and a lot goes wrong, and it's stressful, and you have to be on site a lot. So I decided I wanted to focus on what I was good at, which was underwriting and capital raising.
Nice.
And so we started doing these feeder funds. Some people call it fund of funds, other people call it something else. It's essentially we raise capital in a special separate LLC for the purpose of investing in other people's deals. And so we're taking a look at a ton of deals every single month and then cherry picking the cream of the crop to invest in. And we invite our investors, our friends and family, and anyone else into these deals to invest. And so we've been doing that for the past 3 or 4 years.
Mm-hmm.
Within the past year, we also started going after much larger checks. So these are situations where an operator will need many millions of dollars, and we'll take the deal to a family office or an institution, and we'll see if they can provide the entire check or a large portion of it, essentially JV equity. Sometimes it comes in the form of a co-GP equity where they want to join the partnership and participate in the deal. And sometimes it comes in the form of an unsecured loan. So there's a lot of different types of ways to structure these, but we've started getting into that over the past year. We have a number of relationships that can provide checks like that for solid opportunities. And we're reviewing about 100 deals a month right now.
Wow. Okay. You're keeping busy. That's for sure. I love what you said that, you tried your hand at the operations side of things. That kind of sucked. You didn't enjoy it. You didn't want to keep doing that. You figured out where your superpowers lie, which is in crunching numbers and raising capital, which is a pretty good superpower and doesn't always go hand in hand because usually super analytical people aren't necessarily super people for raising capital. So you must have something interesting going there. So Elijah, let's start with the more of the friends and family and accredited investors, and then we'll definitely want to talk about family offices, ultra high net worth, and that sort of thing. But rewind a few years when you're getting started, like 4 or 5 years ago. What was your approach to raising capital and connecting with accredited investors?
I did it out of necessity. I brought in investors on the very first deal that I did about 10 years ago.
Mm-hmm.
I didn't have enough cash for the down payment on the crappy little single family house in Florida that I wanted to buy as a rental property. And so I called my best friend and my cousin and gave them the big pitch, and they jumped in with me. And I
Yes.
was very lucky that they trusted me. I did that 4 or 5 more times and then started branching out to, non-friends family, more coworkers, and starting to make relationships with actual investors. And then eventually I jumped on LinkedIn and started meeting strangers and developing relationships with these accredited investors for my deals.
All right. So I'd love to unwrap the whole LinkedIn process that you use for taking an absolute stranger from not knowing who the heck Elijah Brown is to cutting a check for 100 grand or whatever your minimum is for one of your deals. So what does that typically look like for you, Elijah?
It starts out with consistently providing valuable content. This isn't, making sales pitches. It's not chat GPT. It's not fluff. It's not hiring someone else to do it. It's coming up with something that you think would be extremely valuable to someone who's going to read it. And nobody's got time to scroll all day on LinkedIn and read posts. You need to create something that catches their eye and instantly adds value. Um,
What would be an example of that?
Sure. So one thing that worked really well for me, I use a due diligence checklist when I review my deals. And so I offered to provide that to people on LinkedIn for free. And that posted very well. Stuff like that. Or some
So
advice.
did you like give the link to the spreadsheet, or do you say, "Hey, I've created this amazing thing. If you'd like it, message me and I'll send you the link." How did
Pretty
that?
much that way, except the way that they get the link is they comment on the post, which helps with the engagement algorithm. So
Yeah.
there's different ways to work at it, but you have to be very consistent, and you do end up burning out with it. But you got to be posting 3 or 4 times a week and
Okay.
commenting on other people's posts for an hour a day, and really staying on top of it. And that's just one way to do it. Another way to do it is physically going to events like
Mhm.
conferences or meetups or things in your local area and actually meeting people. Um, and then the third way, which I have not experimented with, is paid ads. So I've not even gone down that rabbit hole because I'm not convinced that it works.
Well, I agree with you, right? Because you've got a lot of experience laser focusing on specific people. Like you're not just commenting on everybody and anybody's posts. You're probably commenting on people that you want to create that relationship with. That's whose posts you're commenting on. And then smart doing that on LinkedIn because generally speaking, there isn't that much interaction on LinkedIn. So if you're the guy that's liking my post and commenting on my post, you're gonna pop out very, very quickly because, you know, a lot of people put a lot of work into these posts and hear crickets. So if they get a little positive reinforcement, that tends to stick out. So I'm curious, Elijah, how do you take that LinkedIn relationship from kind of getting to know somebody on LinkedIn to them actually cutting you a check? And what's your kind of thought process between the realistic time frame for that to happen?
It's about 2 years.
Yeah,
So we took a look at all the people who have invested in our deals and found out that the vast majority of them either had a personal relationship with me or someone on my team, or they had been in our system for at least 2 years already, interacting with us, getting our newsletters, following our deals, stuff like that. It was not just overnight.
of course.
So, you can't just expect to make a relationship and immediately get them to invest. They have to first trust you and like you and see you as their friend or their personal relationship before they're going to do that. Um, so for me, usually like the baseline number of interactions you need to have with someone for them to even remember who you are is three. And then to start building trust and rapport, it's really five. Unless you're spending a lot of time together. And then from there, all these little touch points in between continue to add the trust and credibility. So we were sending out a monthly newsletter. Now it's a quarterly newsletter. We just couldn't come up with enough stuff to talk about every month. And so we send out a newsletter quarterly packed with a bunch of valuable stuff. I also post about the deals. They see the posts on LinkedIn. We have a text message that goes out. We've got someone calling people to build rapport. So it's really like it's a long-term relationship building exercise, and it takes a long time before someone actually invests.
Yeah, I'm glad you said that. I would have been very, very shocked if he said, "Oh, it takes about 2 weeks to convert somebody from a LinkedIn connection to a 100 grand
Some
check."
people can,
It
some people,
can, yeah.
if you came from like a really like high pressure sales environment where you develop those types of skills, those guys are crushing it. They do very well. It's just not my style. I don't have that skill set.
I don't think there are very many guys that truly have that skill set, especially long term, especially with that caliber of person who probably doesn't react very well to high pressure sales tactics
Right.
sometimes. At least that's my gut feeling about it, Elijah.
Yeah.
Okay. Thank you very much for sharing that. I think that's
Sure.
brilliant. Um, if we have time, I'll circle back and give you an idea or two that might speed it up just a little bit. But let's talk a little bit about how you're going to ultra high net worth individuals. Like that's a big jump
Yeah.
to go from reaching out to people on LinkedIn, hoping that they fit the criteria of a credit investor and starting that 2 year process to now working with family offices, super wealthy individuals in institutional capital. So how did you make that leap?
So I developed operational experience first, which really helped me with raising money in the beginning and getting deals done. Developed that skill set, learned the language. I actually spent 4 years in a corporate role at a large REIT, learned how
Okay.
to speak the institutional language.
Yeah.
And after doing a number of transactions, we have 13 full cycle exits now. I felt that I had the credibility to speak about deals in a way that these institutions and family offices would understand and appreciate, and also the ability to vet deals because these guys are getting hundreds of deals a month as well,
Yeah.
and most of them are crap. And so I figured if I could actually vet these deals and only share with them the best of the best, then they'll actually listen to me and I'll have credibility and they'll actually want to engage with our services. So,
Yeah, well, because sorry to interrupt, but that just because you're providing them with a massive shortcut, right? Whoever that guy or gal is, whose job is to vet these damn deals, and they're getting all this crap coming across their desk. If Elijah comes in and they know, like, and trust that you actually know your stuff, and that you're only going to bring them the kind of deals they want, that's a massive shortcut for somebody.
yeah, I think so. That's our value proposition.
Yeah.
We get so much deal flow, and we're willing to share that with the check writers, and we're willing to share just the best stuff, so that they know when it comes from us that it's high quality. Um, so anyway, we're building those relationships now, and each time an operator sends us a deal, it goes through a multi-stage due diligence process to the point where we approve it, and then we match the deal up with our relationships based on their buy box, and then we'll send them a personal email with the data room and see if they're interested. And so we're building that out right now. We've got a lot of great relationships right now, and we've got about 500 to 600 sponsors sending us deals, which is great because that deal flow is really our value
Yeah.
here. The
You
deal
you don't have
flow.
to do anything.
Yeah.
You don't have to do anything to create the deal flow. They're hoping that you'll bring some capital to the table. So I imagine you've got, I don't know how you classify them, A, B's, and C type deals, and only the top ones are probably going to be shown to those institutional type folks. Is that
Most deals weed themselves out, either because the operator doesn't have enough experience, or because the cash flow metrics are poor. It's really like those two. Sometimes it's a location and a vintage problem, but mostly it's experience and cash flow. That's like the main things we focus on. Just to be more specific, we typically look for operators who have at least 5 full cycle exits behind them. And then for cash flow, we want to see that on most deals, we want to see that the yield that they're going into the deal with, also known as their cap rate, is high enough to pay the mortgage and have cash flow left over for the investors. And the benchmark we use is we want to see that cap rate be higher than the interest rate on their loan. That just tells us right away that it's called positive leverage. It means that there's going to be sufficient cash flow there in year one uh, to not be a super risky. a risky situation. And then we also look at the stabilized cash flows. So once they've accomplished their business plan, does it create a yield for the investors that is commensurate with the risk that has been taken? So for a value add deal, I want to see stabilized investor cash flow over 8%. For a core plus deal, maybe a little bit less. So
Mhm.
it really just depends on the actual deal's risk level. But it's really simple. The longer I do this, the simpler it gets. It just comes down to operator experience and cash flow. That's really all we care about.
Yeah, well, that comes from a lot of personal experience looking at hundreds and thousands of deals at this point. So it's nice when you can kind of, after looking at that many deals, come up with a rule of thumb and just be able to discard 80% of what comes across your desk within a couple of minutes. That saves you a ton of time. So in the last year or so, Elijah, you've started connecting and starting these relationships with these institutional investors, family offices. What are you working with primarily in that department? Family offices,
Mostly
institutional
family
guys?
offices,
Okay.
because our deal flow usually comes in within like the 3 to 30 million dollar range of requests.
Yeah.
And so it's more the family office. Once we start getting deal flow that is requiring 50 to 500 million in equity, that's when you really start going to the bigger players there. And we do approach institutions for like pref equity, and perhaps if a deal needs 20 million of equity, we'll go to an institution. But even those institutions are more like glorified family offices at that point.
Yeah. Okay. So what did you find most effective for you for connecting with these family offices when they didn't know you from Adam?
Well, you can't do cheesy outreach on LinkedIn. They don't listen to the podcasts, and these firms are rarely in my neck of the woods where I live, so I don't bump into them at events. So
Yeah. Yeah.
it's interesting. You have to first figure out who they are. You get that by being in the industry, hearing through the grapevine who's funded what deals, who's doing what. You see some PR come out or something, and you keep track of it. And then there's lists, of course, that you can buy or get access to.
Mhm.
Um, and so we actually will send them, a private email, or we'll give them a phone call and explain what we do and how we can be valuable to them. They only pay us if we deliver an incredible opportunity. So, we actually
How you do you get
the
compensated with those
investors
kind of
don't
deals?
actually pay us. We get paid through the deal at the close.
Mhm.
So they do pay us in a roundabout way
You
through.
get a slice of equity, either probably
Mhm.
from the operator, I'm
The
guessing.
operator will pay us 3% on the invested capital for equity, for
Mhm.
common equity. If we're doing pref equity, which is just an unsecured loan, then they'll pay us 2.5%.
Okay, got it. Cool. All right, so you reach out to them by email. Then what? Does that get their attention, or do you have to kind of,
Sometimes,
yeah?
depends. We try our best. A lot of the people actually come into us through word of mouth. They hear about what we're doing and the deal flow that we have, and then they reach out to us. But yeah, they reach out. We have a conversation with them to understand their buy box. We input all their buy box criteria into our CRM system, so that when a deal comes up, we can just filter it and know the 20 or 30 groups that might be interested.
Hmm. Yeah, smart. Okay, so as we're recording this, Elijah, it's like getting towards the middle of the year already, 2025. Moving ahead, how much of your focus is going to be on building more accredited investor relationships versus family office type relationships?
Raising capital from small limited partners is extremely difficult right now, and I think it will be in the future. A lot of these investors have been burned by
Yeah,
deals that went bad. Not my investors. Luckily, all my deals are decent, but a lot of sponsors got into trouble with their loans maturing and the interest rates going up, and they lost money.
yeah.
So it's tough, and also just with everything going on in the economy, people are holding on to their cash. They're not seeing the exits they were supposed to get. Um, And so it takes a lot of work to fund a deal by going after $50,000, $100,000 checks.
Yeah.
So a lot more of our effort will be going toward trying to establish relationships with the larger check writers who can close a deal with one decision. It's not like we have to go and get 100 people to say yes. We can just go to one group and know that they're good to fund the deal. So that's where a lot of our focus is going to be. Um, and then, so that's the equity placement type side.
Yeah.
On the deals where we're actually directly investing our own money and our friends and family money and stuff with our direct feeder fund investments, those we're extremely selective about. So less than 0.5% of the deals we see, it's like 3 or 4 deals a year, we'll actually go and invest our own capital into those deals, negotiate terms as an investor in those deals. And I would love to do that on a discretionary basis with an actual real fund of funds. So I'd like to raise a couple $100 million and go out and selectively invest in the best 4 to 5 deals a year out of thousands that I'm seeing, and scale that way as well.
And who would be the investors in that fund? What kind of investors would you be looking for?
It would likely be a family office would come in and anchor it for 20 or $30 million. And then I would go approach other investors after that. So,
Like individual investors after that, you mean?
well, a combination of both. So I would go to all my existing investors, but then I would also go find other family offices that wanted to jump in as well. But
Yeah, makes
it'd probably
sense.
start with one family office that could write a large check to anchor the fund in the beginning.
Very good. Elijah, this has been fantastic. Congratulations on making that big leap from individual LPs and investors getting up into family offices. That is smart, and you can speak the lingo. You've got the credibility, you've got the track record. It's definitely, yeah, that seems like a really smart way to go. I'm sure there's going to be a lot of people who want to connect with you, maybe on LinkedIn or what have you. What's the best way for them to do that?
Yeah, add me and shoot me a message on LinkedIn, linkedin.com/in/Elijah W. Brown. And maybe you could put that below or something in the
Yeah, for
notes.
sure. That's
Yeah,
amazing that you remember the whole URL. My
of course.
goodness.
It's because I go on another podcast every week and they always ask.
Oh, that's fantastic. Well, Elijah, thanks very much for being on the show. This has been great.
Of course. Thanks so much, Dave.
All right, everybody, take care. We'll see you on the next one. Hey there. I really hope you enjoyed that episode. And as always, if you want to listen to more daily interview content, make sure you subscribe. And if you're an active real estate investor and you're doing deals and you'd like to get featured on this show, then just head over to daveinterviewsyou.com.